Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, July 13th, 5:37 p.m. Eastern Time, and I am coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market. It's in really a state of confusion, to be honest with you. Now, look over here at the trend gauge, and um, we have a lot of bifurcation. So what you can see here is market leaders still fine. Uh, Short-term trend, what we do is take a look at the five major indexes and see where they are relative to their short-term, medium-term, and long-term moving averages. And we've got a big bifurcation. So you've got the yellow arrow here under neutral, which is really referring to small and mid caps, which are lagging. They're beneath both their 21 and their 50-day moving average. Tried to get above it last Friday, ran into a roadblock, and reversed today with some a double dose of economic news, which we'll talk about momentarily. The Dow, the S&P, and the NASDAQ 100 are fine. They're above their 21 and their 50-day moving average, but the NASDAQ 100 is a little too fine, let's say. At the highs intraday, it hit 7.5% above the 50-day moving average, and that's just continuing to see what we've seen since July 2nd with we put on this red light whenever the whenever the Nasdaq 100 or the S&P 500 get extended. In this case, it's the Nasdaq that is getting extended. Anytime we're 6% or above, this stays on, and we closed the day at 6.4% above after getting as high as 7.5% above. And in fact, we put a hedge on today when a reversal happened after 1 o'clock on a weak bond auction. That was the second piece of economic news. Before the open, the CPI came out what you want to call hot. In other words, it was inflationary, and the market, the futures were flattish to up. They reversed down after that, and interest rates were all over the place during the day. They actually started down despite inflation, but then by the end of the day and after this week, bond auction rates went higher. We'll take a look at the TLT and you'll see what I mean here shortly. But by the end of the day, what just happened was that 10 out of 11 S&P sectors were red, the lone exception being XLK, which is the tech sector. You can see the NASDAQ 100 ended up being flat on the day, although the broad NASDAQ composite was down 0.4%. So really the bigger cap, the big FANG type stocks are what is continuing to hold this market up. With 10 out of 11, you can see how much strength a big sector like technology has when you've got 10 out of 11 red, but the S&P 500 only down 0.35%. Similar with the Dow, down 0.3%. The big laggard here was Boeing, which was down over 4%. Mid caps down 1.5, Russell down 1.9. So not looking too good there from a consistency standpoint. So we've got inflation, but the things that you would expect to benefit from inflation didn't benefit today. With XME, oils down, ITV builders down. So basically, before when we were concerned about inflation, anything that you could drop on your foot was going higher. The only thing that went higher today was gold and silver and gold stocks. Silver itself was down, and then as I mentioned, although oil was up, oil stocks were down. And XLK up 0.4%, the only one of the positive S&P sectors. So a lot of confusion in the market. This is very similar to what happened back in June on June 10th when CPI came out, very inflationary. Initially, we had rates higher and the market down, and by the end of the day, we reversed and rates went down and the market went higher. We had the exact opposite happen today, and we'll get into the charts in a little bit, but this bifurcation, this divergence, whatever you want to call it, is not really good for the market, and it needs to settle down or I'm expecting that we would resolve to the downside. I don't like to make predictions, but especially with the NASDAQ 100 being as extended as it has been for as long as it has been above the 50 and the 21-day moving average also. If that gives way, you could really see the market drop quickly. So that's what we're on the lookout for. So before we go to the charts, here's the guys running Revere. We are, if you're not familiar with our work, we're an active asset manager, registered investment advisor, completely transparent, big into educating our clients and our followers. And we strive to flow like water or bend like a tree in the breeze with what the market is telling us to do. So when the market's bullish, we're bullish and we're near as fully invested as we're comfortable getting. When the market looks like it wants to turn sideways, we lighten up a little bit, and that's what we did today. And then if the market goes into a downtrend, we just get the heck out of the way until the coast is clear. And if you're interested in this approach, you can email any of us. Dan, the big cheese, the head honcho, America's fiduciary, as Tim likes to call him, and I think that's a really great title for him. You can reach him at dan@revereasset.com, or you can reach any of the four of us, Tim, Hunter, Alex, or Don at revereasset.com, or you can call 855-REAL-WEALTH. That's 855-732-5932. So let's get to the charts here. Let me blow these up a little bit. So here's your S&P 500, and this really looks fine. So we had this washout last Thursday where we gapped down, but we ended up finishing higher, and then finished at the high of the day, and then up 2 days, and then just a little pullback today. Really, there's nothing wrong with this. It's perfectly normal. But the action underneath the surface isn't really too normal, and that's, as technicians, we pay a lot of attention to that. So while this looks fine, under the surface, everything is not as fine. Let's get to the NASDAQ 100 here, the QQQ, and as I said at the top, at the high of the day, this is the equivalent of a shooting star. It could be the second candle in an evening star, which is a bearish combination. So, or it could just be a normal pullback. But again, putting in a bottom on Thursday, getting back above the 8, rallying higher, and we're rallying from an already extended situation here. So, one second, let me get rid of this. So 7.2 here, this gap up, this is where we initially put the red light on when we closed 6.4% above the 50-day moving average. And at that point, we were 3.4% above the 21. Also, you can see those numbers there as they flash up. And as I slide, we continue to be extended, 3.5% and 6.7%, 3.4%, 6.8%. Here's the pullback day, 2.5% and 6%. And then 3 up days, 2.8%, 6.6, 2.9%, 6.8, and 2.7%, 6.7. So yeah, extended, a harsh pullback would not be a surprise at all, as we do revert to the mean over time in situations like this, and it's rare that for 7 sessions we would continue to stay 6% or more extended above, especially with the deterioration that's going on under the surface. So let's go to the Dow Jones Industrial Average here. This looks fine also with the last Thursday shakeout below the 50 and the 21. 2 nice up days to all-time highs, very brief pullback. I would expect the Dow to outperform if tech starts to give way. Mid caps and small caps, here's where the problems really start. You can see well below the 50 and the 21 here, and 2 up days where we tried to get above those levels and failed today. There's your mid caps. Let's bring up the small cap ETF IWM. Failed into the declining 21, broke back below the 50. Relative strength horrible recently on mid and small cap. So let's break this down into growth. Here's IWO. Stronger, but not as strong. And you can see the same situation, undercut of the 50, reclaim the 21, back below the 21, but still above the 50. And then IWN, which is the value portion. Worse relative strength over the last 4 weeks, as you can see, since we had this failed breakout from the range on the value portion. And this again really refers to the weakness that we've seen in basic materials, oils, industrials, and financials. With interest rates rising in financials, the banks are going to be weak. So let's take a very quick look at these. XLB, basic materials under the 50-day, downtrending 21, terrible relative strength. So there's your basic materials. Next up, oil, XLE. This is the least bad of them, but you can still see relative strength declining over the last few weeks. XLF is the finance sector, trying to get back above this 50-day moving average, but gave it up today. And again, declining relative strength over the last 4 weeks. And XLI, the industrials, the strongest of those four, toggling back and forth above the 50 and the 21-day moving average. So, but look at the relative strength. The chart can fool you from a relative strength standpoint. See how that continues to drop. And what this is comparing the performance of these sectors versus the S&P 500, and the S&P 500 is being propped up by XLK. You can see how that's taken off to the upside, and these trends simply don't persist. We'll ride them as long as we do. We're always on the lookout for signs of topping, and get ready to get defensive. We've got our stops in place. Our downside is approximately 4%. On a total portfolio level at this point. So let's look at the TLT here, and let's break it into a 15-minute chart, and you'll see what I can see here. So the gap up, TLT, remember, TLT up means rates dropping. So inflation hot, but oddly, prior to the market open, this shows TLT up, so rates down. They peaked early and then started dripping down, and then you can see this waterfall here. There was a report that at 1 o'clock that the bond auction did not go well. That means there wasn't demand for it. Well, that's really about the worst thing that a country that's trillions of dollars in deficit can see, is a weak demand for bonds. I mean, the bond market dwarfs the stock market, and if we're going to have serious problems in the bond market, stocks are going to come down as well as bonds. So this looks bear flaggish. Actually, we rallied a little bit into the close. So there's your TLT. Let's see on a 15-minute chart what happened with the SPY. You'll see something similar. We gapped down, rallied as TLT came off, and then gave back a little bit. But then this was a fairly harsh drop, and then dripped down near the lows of the day into the close. Let's look at the QQQ for when this happened. This is really a more severe, as you know, growth stocks and tech stocks are more sensitive to what bonds are doing. So when the TLT came off, which means rates were going higher, that impacts the QQQ, and that was a pretty harsh fall. And when that happened, that's when we put the hedge on using SQQQ against our long positions, which are quite a bit tech centric, not completely, but we've got our stops in place. So let's take a look and let's ask ourselves if these things are getting ready to top. I want to look at the Fab 4 that's led the portfolio, between 15 and 30% gains on this. And let's start with Nvidia. We're down to a half size in Nvidia, and really we're going to watch relative strength to see what's going on here. Nvidia, 2 closes below the 8 for the first time. That was a change in character during this big run, but completely normal. It did reach 28% above its pivot, and this really looks fine, but the question is it going to stall? And let's turn on Stochastics here. This is an indicator of how is the chart performing relative to recent performance. And you can see that 80 is considered bullish over here. 20, you look to put a bottom in, and then when it turns back up, and you can see that this is consistent with the price action. The stochastic is consistent with the price action. And we're threatening to break under 80 here, and we just could see a more severe correction going down. Like, for example, right here, we dropped from 648 to 538 on Nvidia when the stochastic topped before it bottomed back in April. So this is a situation we're trying to avoid. Part of the process improvements that we put in place from the big drop that we had in February in growth stocks is to lock in our gains quicker, not give back as much, and be more wary about what's going on in other sectors. So Nvidia is the first one of the Fab Four. The second one, we'll bring up DocuSign. This has been on a fantastic run since its earnings report. Again, trending for weeks above this 80 level, now hooked down, didn't break below the 80 level, but it's just gone sideways here for about the last week and a half. The third one we want to take a look at is CrowdStrike. And notice that CrowdStrike and Docu are just at the top of their bases here, so they haven't broken out and ran 25 to 28% above the base the way Nvidia did, but this one broke below 80 today. CrowdStrike, we still have a full position on this but again, just going sideways for about the last 6 or 7 sessions. And finally, Net. So Net again breaking below this 80 level on the stochastics after trending higher. So we're tightening our stops. As I said, the whole portfolio downside is less than 4% at this point. And let's take a look at what continues to act well. Apple. Apple just not showing any weakness at all as the stochastic continues to just trend sideways in oversold. Amazon put in a reversal today after a very strong day, and it did hook down but didn't break 80. Amazon, we have positions in Apple and Amazon, and our Qs are offsetting that position. The Q short is offsetting that position, as well as the 4 tech horsemen that I just showed. Let's talk about a couple of others that we have positions in. We've got PayPal, which is acting fine. Again, trending for quite a while in overbought territory here. We also have Lululemon, which had a hook down today also, so we're wary again. We've got our stops tight on this. Nothing's going to get below the 21 without us being completely out. And Roku, we've been in and out of this. We're in it now, but it actually broke below about a week and a half ago, as it had this. When you've got a very strong, consistent run up, this is telling you what the chart is doing relative to what it did recently. So notice Roku didn't really come down to where it was oversold at all. So it didn't take much for it to start going over. So there is some nuance to understanding how these charts interact with the stochastic. We also have CMG, Chipotle, and that's just trending very nicely higher along this 80 MA. So we also took a position. We got stopped out in 2 things today. Upstart, this thing is just a cue the poop emoji on this one. Big Goldman upgrade. Maybe they just had to sell, because that's what it looked like it happened today. We got out of this with about a 2% loss when it broke back below its key moving averages. Also Marvell, which I bought on Friday, got out of it when I was expecting this bounce off the 21 to be a little bit stronger. Couldn't hold the 8, and about a 2% loss on this one also. Sold that after that big whoosh down in the Qs after that bond news came out. And we took a position today in MSOS, where it tried to break out, that reversed into the close. Let's take a look at what MJ's doing, because there is some news about Chuck Schumer's cannabis bill, which is going to legalize banking for cannabis companies and also reduce federal penalties, but that doesn't look like it's doing much after hours. So I'm not going to show MSOS, which is what we own, because that its holdings trade. Well, look at that after hours. Maybe I am okay with it. That's up 2% after hours, so that would put us back near even. That's going to wrap it. As always, like to hear from you. So lots going on in the market here. Never try to predict, but we do interpret what we see. And although the S&P, the Qs, and the Dow still look fine on the charts, underneath what's going on with the charts is what we're concerned about. And if tech the super extended tech, if that would get a whoosh down, I think that you'd see a lot of, well, I know just from a math standpoint, unless you had massive bounces up in the cyclical type names, which is very possible, the whole market would drop a couple percent, but we haven't tested the 50-day moving average in 1, 2, 3, 4 over 4 weeks. This has been a decent run. Maybe it's time to take a little pause, whether or not it's the pause that refreshes or something worse is what we're going to let the market tell us. So as always, I'd like to hear from you. I'm on Twitter at dvandenbord, email don@revereasset.com, phone 855-REAL-WEALTH. So wrapping up, Tuesday, 7/13, this is Don Vandenbord with Just the Facts. Thanks for listening and have a great day.